In one of my videos, I said that saving, spending and making money are all the same things. A subscriber asked me to explain in more detail. So I decided to make a small series of very simple short videos explaining what I meant. This is video number 4. In video number 1, I covered my background and explained why gold is a bad investment. In video number 2, there is a report that says 80% of new businesses will fail within their first 2 years. I explained why this is wrong. This was debunked in the late 1980s. There are no source or combination of sources that can provide this information. In video number 3, I explained why having a business is the best investment. In the United States, if you have a job, and you have a business, and if your business loses money or makes no money, you will still make money through taxes, savings and refunds. This also applies to real estate. My best advice. I will give you the same advice people gave me in the 1980s. Back in the 1980s, many of my friends graduated college, got married and purchased homes. Then in 1990, the United States went into a recession, but everyone wanted to skip over this period. They want to say that this recession only lasted for 2 years, but the recovery lasted for a long time. However, if you ask the people who were affected the most by this recession, they will say that it started in 1989, and lasted until 1996. There is a lot of bull-crap politics surrounding the dates. Anyway, what my friends told me was to never get a mortgage that has a variable interest rate. Only get a mortgage that has a fixed interest rate. They said they got a mortgage that had a variable interest rate, because the bank told them the interest rate will not increase that much. Plus, if the interest rate drops, then your monthly payments will also drop. Here is the problem with what the bank told them. If you get a 30-year mortgage to purchase a home, the first 15 years of payments will mostly go to the interest and not the principal. So, if your monthly mortgage payments are $1,000 a month, then $700 might go to paying off the interest, and $300 will go to paying off the principal. This means that if the interest rate is 5% and it increases to 7%, then your monthly mortgage payments might go from $1,000 a month to $1,500 a month. This is what happened to many of my friends. And forget about refinancing the mortgage. My friends were told things like, you do not have enough credit history to refinance. The new fixed rate is 9% or greater than the variable interest rate. Plus, never get a balloon mortgage. A balloon mortgage is where the monthly payments are very low for 2 to 3 years. Then in year 4, you have to pay a big amount, like the whole mortgage. The bank might say that his type of mortgage will help you get started, and after you build a good credit history, then you can refinance. I do not know anyone who was able to refinance their mortgage, and they all lost their homes. Plus, like the recession of 2008, the government bailed out the banks. The bank in 1991 that got a bailout. The bank that made the most money was the investment bank Merrill Lynch. The person who was head of the United States Treasury. The person who created the plan to bail out the banks. He came from Merrill Lynch. And just like in 1991, the bank that got a bailout. The bank that made the most money was the investment bank Goldman Sachs. Plus, in 2008, the person who was head of the United States Treasury. The person who created the plan to bail out the banks, he came from Goldman Sachs. In the 1960s, Disney made very popular cartoons. In the 1970s, all the new children had never seen these cartoons, so Disney relaunched them. Thus, Disney made a lot of money from these cartoons for a second time. People forget what has happened in the past, or think that it was so bad that it will never happen again. So they do not tell or warn the next generation. This is how the banks in 2008 were able to do the same thing they did in 1989 and 1929 with the Great Depression. Then over time, they surround these events with a lot of political bull crap. Television shows. I know many see television shows about people making a lot of money from real estate. However, what these television shows do not show are all the problems these people had to overcome to get to the point to where they knew how to make money. I knew more than a few people who watched these television shows and tried to use what they saw to make money from real estate. I had friends who tried this. They encountered many problems and did not have the money to continue. The people on these television shows probably also had a lot to learn when they started, but they had the money to continue. My friend's father died, and he got a big inheritance. With this inheritance and his life savings, he purchased 2 homes that he planned to rent out. However, the homes he purchased needed work. Since Paul was new to this type of business, no bank would loan him the money to fix the homes. And until Paul fixed the homes, the city would not approve them to be occupied. With help from family and credit cards, he was able to fix one home and got it rented. However, the rent from this one home was not enough to cover the credit card debt or property taxes. Plus, Paul was not making enough money from his job to pay the property taxes on the other home. Paul sold both homes for less than what he paid. There are two issues here. The first issue is that many people do not realize that in some places, property taxes are more than your monthly mortgage payments. In the United States, if you purchase a home, try to make sure your monthly mortgage payments include your property taxes. Some banks do this automatically, and some banks do not. Some people will get a big property tax bill after 2 years, which many do not have the money to pay. Thus, they lost their home. This is what happened to my ex-girlfriend Pam's family. Someone purchased the outstanding property taxes and forced Pam and her sisters to move out and lose the home. The company that purchased the outstanding property taxes used scare tactics. Pam and her sisters always said that they did not need a man, but for this situation they did. The second issue is that Paul did not purchase the homes under a business name. He purchased the home under his personal name. People always think that they have to own money or own assets under their name. The truth is that if you win the lottery, buy a property, or purchase a car, you should always put it under a company name and not your own name. You have control of the company, which means you have control over the money, the house or the car. Therefore, you can do whatever you want with it. By having these assets under a company's name gives you a lot of tax benefits that you will not have if they are under your personal name. Remember, this depends on the country you live in. Every country has different tax laws. So what I am saying in this video might not apply to you. For example, in the years 1991, 1992, and 1993, the company called Advanced Micro Devices, which is Intel's competitor, paid zero in taxes and got a refund in taxes. This company had property in Florida, which they had for a long time. I cannot remember what the real numbers were. It has been more than 30 years. Let's say they purchased the real estate for $100. After 1 year, the real estate is now worth $300. They sold the real estate for $150, which means that they made a profit of $50. If the real estate were under someone's personal name would mean that he would have to pay capital gains tax on the $50. However, since the property is under a company's name means that it is a loss of $150. Therefore, they can deduct $150 from the company's income taxes. And apply the $150 loss to the previous 3 years and get a tax refund for those years. It also means that the company can apply this loss to taxes they paid in the previous 3 years and get a refund. Thus, they paid zero taxes for the year 1993, and got a refund for the taxes they paid for years 1991 and 1992. Now Paul worked a full-time job, which meant he paid income taxes every year. If Paul had put the homes he purchased under a company's name, then all the money he spent fixing the houses could have been deducted from his personal income taxes. This means that he would have gotten a tax refund for the previous 3 years he paid personal income taxes. Then he could have used this money to pay his credit card debts. Cars are the same. If you lease a car under the company's name, then everything associated with the car is a tax deduction, which you can use to reduce your personal income taxes. However, there are some tricks to this, which I cannot tell you because it might be considered violating tax law. But basically, when you lease a car, you can get a new car every 2 years. I know a few people who purchased homes in the early 2000s thinking that they will live off the rent they received. In most areas, what you rent the home it will equal your monthly mortgage payment, plus property taxes, and a little extra for future repairs. Therefore, there is not much left to live on. One more thing. If you purchase the property under a company's name that is a corporation, then all your personal assets are protected. This means your house, car and income from your job are protected. This means that if the bank forecloses or you have to file bankruptcy, then they can only go after what is in the company's name and not what is in your personal name. If the company has $1 million in cash in the bank, then you pay yourself $1 million. Thus, the company has no cash that they can get, and you get to keep all the money you made with the company you control. Plus, it will not affect your personal credit record. However, the company's credit record will be bad, but who cares? You are about to close the company. So you close this company and open another. This means that the new company will start with a new credit history that is not affected by the credit history of the old company. Plus, since your personal credit record is not affected, then you can use it to start a new business and later change the business to a corporation. This is how some people can have a bankruptcy every other year and start a new business with no problems. Trump has had 8 bankruptcies. Section 8 Housing. Before I explain about Section 8 housing, I want to tell landlords to rent your place to people with disabilities. There are many types of disabilities. You have people who are blind, people who have developmental disabilities, and senior citizens. People with disabilities will not destroy your property, rent is always paid on time, and most of the time, they never move out. Plus, it is not that difficult to make an apartment handicap accessible, inside and outside. Plus, it might not cost that much money to make the apartment fit the handicapped person's needs. It depends on the person's disability. For my foreign viewers, in the United States the government provides money to people who are poor to pay rent. This program is called Section 8 housing. Most of the people that use this program are single mothers with children and people who are disabled. Section 8 housing has a 10-year waiting list. So there is a big demand. The problem is that many landlords, nationwide, in every state and in major cities, do not want to rent to single mothers with children who are on this program. This has caused many single mothers with children to become homeless. In some areas, they are living in tent cities. Tent cities are popping up all over the United States. Here is how this has happened. In the 1980s, my aunt had a house in Chicago that she rented to a single mother with children. The woman was in her mid-30s and had 4 teenage girls. They destroyed her house. There were holes in the walls, broken windows, and a lot of other damage. A few days before the authorities from the Section 8 program were coming to inspect the damage, these people, in the middle of the night, came back and burned down her house. This was in the 1980s. And those 4 teenage girls also had children and became single mothers. And their children had children and became single mothers. So since the 1980s, you have had at least 3 generations of children that had children and became single mothers. This is a lot of women. This has resulted in many landlords, nationwide, in every state, and in major cities, experiencing the same things my aunt experienced. Which is single mothers with children destroying your property. So now, many landlords will not rent to people on Section 8. As I said earlier, you do not have to rent to single mothers. Rent to people with disabilities. Yes. It might be a little more work to address their needs, because every disability is different. But people with disabilities will not destroy your property, rent is always paid on time, and most of the time, they never move out. The best way to buy real estate. The following is the best way to purchase real estate and make money. However, many cannot do this because they do not have the money. Yet, this is what they do on all those television shows. They purchase the house with cash. Fix the house and get it rented. Then they go to the bank and get a mortgage. A mortgage is a loan and is not considered income. You only pay taxes on income. Plus, since this is a business, the interest on the mortgage is tax deductible. The rent on the house is enough to pay the mortgage, the property taxes and a little extra for future repairs. Do not forget that all the money that you spent to fix the house and the interest on the mortgage is tax deductible. Then they use the money from the mortgage to buy another home, and the cycle or process starts all over again. They also use the money from the mortgage to pay themselves. Since they are employees of the company, what they pay themselves is tax deductible for the business. The business income is from the rent it collects. However, if the rent is equal to what they pay themselves. Plus, if you take into account all the tax deductions the business receives, then the income tax for both the business and their personal income tax might be 0. Plus, for the years the business did pay taxes, you might be able to get a refund.